Since January of 2025, something bizarre has been happening in the US housing market. While reported prices are still near record highs, the sentiment in the market has completely flipped. Everything we know about housing is falling apart. The echoes of 2008 are rippling through the market, and there is now growing evidence that we are starting to see this massive post-pandemic super bubble pop overnight. The similarities between 2025 and 2005 are stark, and if we go back to the last bubble, we can start to see why so many believe that this crash has already started. And just like before, it always starts in one particular place before anywhere else. The acid test for the entire nation, Miami, Florida. In 2005, it was here that everyone involved in the market basically knew things were going to get very bad very soon. I know the media loves to portray certain firms or individuals as having a Nostradamus-like intuition in predicting this infamous 2000s housing bubble, but plenty of people saw 2008 coming way before it ever happened. They just didn't have a very good way of making money on this supposed future event, so of course they never received any notoriety from predicting it. For example, in this Reuters article about the Miami condo market written in October of 2007, we have multiple individuals quoted essentially guaranteeing a hard crash in the coming year. And guess what? If we align the day this article was written with the Case-Shiller, which tracks US home prices, we can see that this was written and predicted before there was any clear national data coming in that prices were headed down. In fact, this was the high point of the market, yet examining the article, you would think that Miami was burning down. In August of 2007, the Miami market was coming off back-to-back scorching hot years, but plenty of people saw the writing on the wall. Condo sales had dropped 44%, but prices were still somehow going up. This was happening despite the fact that the number of condos for sale, aka the inventory levels, had jumped to 36 months of supply, which is 6 times higher than what is considered healthy and balanced. Two different people quoted in the article saw the massive cliff before everything nosedived. Peter Zalewski is quoted saying, in May 2008 or so, the true blood is going to flow. And in the next paragraph, Brad Hunter is quoted saying, in the next 6 to 12 months, we will see the beginnings of that moment of truth. And they absolutely hit the nail on the head. From October 2007 to April 2011, the Miami Case-Shiller declined 43%. And remember, this Case-Shiller is for average single-family homes in the area. I couldn't find reliable price data for condos in downtown Miami, but the decline in the condo market for this specific neighborhood was likely much worse. If you want an example, look no further than the prestigious View building in Brickell. This 37-story luxury condo project completed construction in 2004 during the height of the condo frenzy in South Florida. In the summer of 2006, Unit 1413, a 750 square foot, one-bedroom listing, sold for $513,000. 3 years later, the bank took over the property and one lucky buyer bought it for $90,000. In just 3 summers, the value of this property declined 82%. It could be argued that to this day, this condo never regained its initial value and never recovered from the '08 crash. A similar one just sold for $410,000 in the same building, which means that almost 20 years later, these same condos are selling for 10 to 15% off the initial highs, despite all the inflation that has occurred since the early 2000s. And it showcases that despite Miami showing a 50% decline in the official Case-Shiller in the post-08 period, condo prices here in the downtown areas were probably hit harder than what the data suggests. But what does all of this have to do with 2025? Well, just go back to these words in the article. Quote, condo sales had dropped 44%, but prices were somehow still going up. Why am I focusing on this? Because it's exactly what's happening today, but before we get into that, it's also important to note that real estate is very different than stocks or other market mechanisms. The value of your home is realistically created by just a few sales. If somebody asks you how much do you think your home is worth, your initial assessment will be based off your neighbor Tom, who sold his house last year for X amount, and his was of course worse than yours, so yours is worth Y amount. These are called comps. Home prices are built off just a few sales that occur a few times a year in your specific neighborhood. Because of this, before prices decline, sellers are usually in complete denial. They will withdraw listings or blame agents before they ever accept market conditions as a factor. And all it takes is one stupid buyer to make an offer without realizing the softness of your market for you to offload your home at the price you want. So what I mean to say with all this is that when there is a real estate slowdown, there usually is a period of nothingness before it, a spot where sales dry up but prices stay high on the charts. Even non-real estate people understand this. You can hear Warren Buffett talk about it in this very short clip I mentioned in a recent upload.
When you in effect have had the day traders, of the internet move into the day trading of condos, then you get a market that can move in a big way. First it sort of stops and then it kind of reopens. Real estate is different than stocks. If you own 100 shares of General Motors, it's going to trade on Monday and that's what it's worth, and you can't kid yourself about it. But if you own real estate, there's a great tendency to think about the one that sold down the street a few months ago. And there's a great tendency to think, you only need one buyer who hasn't gotten the word that things have slowed down and you'll make your sale. I can tell you that in Dade and Broward County, for example, in Florida, where the average condo is about $500,000. If you go back to December of 2004, there were less than 9,000 condos listed for sale, and I think 2,900 of them sold in the month. So you were turnover one every 3 months, less than that. Now the listings are up to 30,000 and the sales are down to under 2,000 a month. Well, 30,000 is $15 billion worth of properties, and you were very likely, you can get real discontinuities in a market like that where all of a sudden people realize that the whole supply-demand situation has changed. So I think we've had a bubble to some degree, and it's very hard to measure that degree till after it's all over. But I would be surprised if there aren't some significant downward adjustments from the peak, particularly in the higher end properties.
The reason I mentioned this period of nothingness is because right now the market is pretty much frozen, reflecting this state of nothingness. According to the MBA index, which measures how many people are taking out loans nationally, you can see it's basically at record lows. And if you don't buy that measure, we can take a look at Alto's research, which reports pending sales. And as you can see, the start of 2025 is actually lower than 2024, which was already a record low year for sales. So at least according to these figures, the market is indeed frozen, a period of nothingness, like I said before. And for inventory, while yes, the national figures still look okay because of solid health in the Northeast and Midwest, particular markets like Miami are starting to look a lot like '08. According to Peter, the same guy who was quoted in that '07 Reuters article, the current Miami Beach condo months of supply is 15, nearly 3 times higher than what is considered balanced, and Sunny Isles just down the street from Miami is 21 months of supply. So let's do a quick review here. In '05, we had a scorching hot market nationally. The Miami condo market was the centerpiece for this growth and decline. In '07, condo supply levels grew exponentially, reaching 31 months in some Miami neighborhoods. But somehow, despite all of this, prices remained temporarily resilient despite falling sales activity. 1 year later, there was a complete collapse. Now fast forward to 2025, and what do we have? A scorching hot market from the pandemic growth period nationally. The Miami condo market is booming, but prices are now flat. Supply levels have grown exponentially, ranging from 15 months to 21 months of supply. Yet despite all of this, we don't see too many price drops. Sales are basically frozen, with pending sales falling even further from last year. The stock market is beginning to shake, and at this point, you have to at least accept that a lot of this looks looks very familiar to 2008. How it all ends, we don't know, but when you have supply levels hitting 15 plus months and demand falling off a cliff, combined with falling equity prices, you can't help but to speculate that something is going to shake this market up, and once again, it may start here in Miami, Florida. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it.